watching the latest Cyprus news from financialmirror.tv. Cyprus President Christofias stepped down as leader of the ruling Communist Party AKEL after 20 years at the helm, handing power to party press spokesman, the moderate Andros Kyprianou, who was reported to be his favourite for successor. The new party leader was elected by the AKEL Central Committee with 57 votes. The only other candidate, parliamentary spokesman Nikos Katsouridis, received 48 votes. 53-year-old Kyprianou is the fifth General Secretary of the Communist Party that initially opposed European Union membership and the adoption of the euro. It controls about 30% of the public vote and expects to re-elect 2 members to the European Parliament in June. Cyprus said it will stick to a 2.1% growth forecast for 2009, a day after the European Commission gave a sharply lower forecast of 1.1% growth for this year, after reducing its forecast for Eurozone growth. For the 16-member Eurozone economy, the Commission is now forecasting a contraction of 1.9%. It also forecast that after posting a surplus of 1% of GDP in 2008, public finances in Cyprus are projected to move into the red in 2009. On account of subdued revenues, though a rise in current expenditure is offset by a reduction in interest payments. Inflation in Cyprus is estimated to reach 2% this year and 2.3% in 2010. Meanwhile, according to PricewaterhouseCoopers' latest report on European economies, Cyprus is likely to experience a significant deterioration in its short-term economic outlook, and the economy is forecast to expand at a slower pace in 2009 compared to recent years, although growth will continue to remain above the Euroland average. In another confirmation of the demise of the stock market, the 17 investment companies listed on the Cyprus Stock Exchange reported total losses of 328 million euros last year, with a massive 77% drop in equity prices and declines in real estate taking their toll on fund performances. Dimitri Investment remained the largest investment company with total assets of 190 million euros, while Interfund was the biggest loser among the major cap companies as it slipped from 3rd position to 5th based on total assets. The State Ports Authority has secured parliamentary approval for an additional 650,000 euros to its budget to pay for overtime work at Limassol Port due to dredging work and an increase in container movement. MPs told the authority that it must contain its costs and reduce bureaucracy at this service that enjoyed a higher revenue of 66.4 million euros last year, up 10 million from 2007. Future plans at Limassol Port include a new passenger terminal, while Larnaca Port will not see any change, subject to the creation of the marina project there. The Cyprus Tourism Organization and the Hoteliers Association are making every effort to limit any negative fallout on the island's main tourism industry, which has been affected by the world financial crisis. Tourist arrivals in Cyprus fell 0.5% last year to 2.4 million. The devaluation of the sterling further aggravated tourism from Britain, while the world economic crisis played a significantly negative role in the sensitive tourism sector. As far as 2009 is concerned, the CTO said that it will be yet another difficult year for tourism, adding that the organization is in continuous cooperation with interested parties and is making every effort to exploit all opportunities to achieve the best possible results. In another sign that the global credit crunch has arrived in Cyprus, it was officially announced that the Motor Show 2009, initially planned to take place in February, has been cancelled. With car sales diving 40%, car importers are reluctant to spend more money on promotion and are asking banks to encourage consumers to buy new cars through lower finance schemes and incentives for eco-friendly models. CMP Marfin Insurance Holdings Limited, the new company created out of the long-term partnership between France's leading insurer, CMP Insurances, and Marfin Popular Bank, aims to take between 5.5% and 7% of the Greek insurance market, while maintaining its dominant position in Cyprus. Gilles Benoit, General Manager of CMP Assurances, told a news conference in Nicosia that CMP, whose experience in the insurance industry dates back to 1850, is the largest life insurer in France, with premia exceeding 32 billion euros and a presence in 7 countries. The new insurance company's CEO, Dagis Fidia, said that based on total premium income, CMP Marfin was the largest insurance company in Cyprus in 2007, with total premium income of 149.4 million euros or 21.6% market share. According to data from the Insurance Association of Cyprus, Eurolife, a member of the Bank of Cyprus Group, and AKEL Cypriolife, a member of the Marfin Popular Bank Group, jointly controlled 66% of the life insurance market. In the non-life sector, the top 3 positions were held by bank-owned companies. AKEL Insurance commanded the lead with nearly 16%. In second place was General Insurance Company of the Bank of Cyprus Group, with a market share of nearly 12%, while in third was Pan Cyprian, a member of the Hellenic Bank Group, with a market share of 9%. Thanks for watching FinancialMirror.tv.